Yeah, if you need resources, it's in the video description below. Links to everything. What time is it? Is it time to go? I guess it's time to go pretty soon, huh? How you feeling? Somalia. How you doing, Somalia? Yeah, too. I'm going to get slapped for that. Coldplay violation. All right. Guess we should get going. Good morning. Colombia. Going back to Cali. Never understood why Dr. Dre made a song about a Colombian city. Anyways. Good morning, everybody. Guess we got to get going. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, nice to see you. My name is Wayne. Welcome to Forex.Today. This is a community of almost 14,000 foreign exchange traders that get together every single morning, 8 a.m. New York time, to realign their satellites, sort of midday in the trading day. We can talk technical analysis, fundamental analysis, trader psychology. What does this mean? What does that mean? What do you think of this? What do you think about that? And anything else related to macroeconomics, foreign exchange, markets, central banking, all that kind of stuff. So welcome here. By the way, my name is Wayne McDonald. I am the Chief FX Market Strategist for Traders Way, the sponsor for these webinars. So please visit tradersway.com and give them an opportunity to earn your loyalty and respect. See, they're investing into this channel so that you have education. They want you to succeed. They're investing into you up front. And when you become, let's say, a more skilled, more educated, more experienced trader, and you feel confident enough to trade real money, the idea here is you say, you know what, Traders Way has been backing me from the beginning. So out of that, just out of loyalty, you're going to open up a real account at Traders Way. So start, if you're benefiting from these webinars right now, start today by visiting Traders Way and opening up a demo. You can download MP4 from your back office, place a bunch of trades, and you'll see the execution speed is fast, the spread is narrow, the swaps are huge. If you prefer an ECN account, it's your way at Traders Way with Trader Wayne. Cool. What else? Treat everyone in the chat with dignity and respect. If you're a spammer, please disappear. Do us all a favor. We're not interested in whatever you're hacking. Cool. Hacking and hawking. I guess it's hawking. But so anyways, good to have you here, everybody. I know you've been working hard for weeks, months, and years even on this thing we called Forex. Hey, it's a tough gig, but it's totally worth it, let me tell you. Okay? Totally worth it. All right. I'm going to ask you for a like. Could you please knock that out right now? Just do the little thumbs up thing. If you're new, please subscribe so that you get notifications when I do these webinars. And of course, if you, over the years, I've been doing these webinars on YouTube for about 12 years, or however old YouTube is. I was basically a beta test for YouTube. And I've been doing webinars at FX Street for 15 years. And then I've been running FX Bootcamp for 16 years, maybe. So I've been doing this a long time. And inevitably, traders have said, hey, Wayne, can you write a book? Hey, Wayne, can you do a course? Hey, Wayne, can you do this? Hey, Wayne, can you do that? And I'm like, yep. So in the description below the video, there's links to Traders Way. There's a link to my book. There's a link to the video training courses. There's a link to live performance coaching. There's a link to download my chart templates. There's a link for this. There's a link for that. And those are resources made available to you. Okay? And here we go. This is what we're going to do today. So, how you feeling? You good to go? Hot to go. H-O-T-T-O-G-O. Oh, hot to go. Tomorrow is the big day of the week. So many things. Actually, I wouldn't say that. Usually, like, if you're a professional YouTuber, there's like 24 things. Right? So, let's see where we is. Oh, I got one of my grades. It's not 100% final, but I had to add it up. So in my strategic negotiation and conflict resolution, like how to handle a terrorist situation and negotiate, that class had 3 written papers, formal papers, you know, with cover letters and citations and MLL format, 2 exams, 1 midterm and 1 final exam, 1 group project, and then I think about 8 activities, and then a whole bunch of other graded things that you had to submit, right? Total value of 1,000 points. It seems in my calculations that I got 976 points out of 1,000. That sounds like an A, baby! Sounds like an A! So anyways, can't wait to have that officially out. That doesn't come out for another week, but yeah, 97.6. It's a lot of work, my friends, so I'm happy. Happy. So we'll, happy. That's a lot of effort. Let me tell you. That's a lot of effort. Anyways, so I tried hard, and it looks like it worked out. All right, so here we are. Here he is. Forex.Today. Boo, 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 boo. Okay. Wednesday. Well, how about this? Tonight we got Chinese interest rates. That'll be interesting. Probably change the RRR. Okay. So anyways, that might be interesting tonight in the Asian session. Okay. And then what about Wednesday? Well, ECB, obviously a big deal, right? But I think the biggest deal of them all is the FOMC. So we know, like, France and Germany got together, right? And they're going to throw down 500B. I guess that's all right. 500B. Well, the Fed did 2T. No, sorry, 4T. So Germany and France have finally got a deal together, 500B. You know, Italy did their bailout, right? It was 40B. That's less than California's bailout. Like, so the Europeans have decided to do not enough and do it pretty late. So good job, Europe. Let's do not enough and let's drag our feet by a month, right? So finally, Europe is way behind and way behind. So ECB decision, I don't know. I mean, look, dude, I don't know. It seems like too little, too late. Canada, this will be interesting, obviously, to see if there's any new demand. I don't think you're going to see consumer prices up. So I don't think that's going to be a shocker either. So pay more attention to the Bank of Canada than these silly little news releases. And then today, FOMC meeting minutes, we need to check to see if they actually discussed negative interest rates or not. That's what this is all about. Okay, this is what's important. And look, we don't really have, we don't have any news today. Well, we got this testimony at 10, but not at the moment, right? So I think things are probably going to be on hold, until we kind of get there. Okay, hang on, I got to shut this guy up. Be quiet, CNBC. Okay. So anyways, the big news is like all these little data points, like usually like CPI and all that's really big, but that's not what we're worried about right now. So this too little too late European interest rate decision and all these different things, I don't know what Lagarde's going to be able to do. Okay. So we come down here to FOMC meeting minutes. We know Powell wants to do, he says he's got tons of tools. He's willing to do whatever it takes. That's all good. Okay. But we're reading to see if they're even serious, because there's a lot of discussion whether they're going to go negative. I don't think so, but I don't know until I read these FOMC meeting minutes. If they discuss going negative as a possibility, I mean, don't say like they discuss it about not cutting. I mean, if they say, well, it's a real option that we might consider, that'll strengthen the US dollar. If they discuss in the FOMC meeting minutes that they're never, ever going to even consider it, then the dollar weakens. If they didn't discuss it at all, the dollar weakens. So Sanders says, don't we have building permits? Yeah, what is that going to do? Okay, that's a data set, right? That's a data point in a data set, and we typically measure data sets and interpret that information and say, well, what's the Fed going to do with that? But we already know the Fed's like, we're so above that that's not, the Fed's not even thinking about that. That's not what's changing central banking policy. The only thing that matters to you as a foreign exchange trader is central banking policy. Right? That's what I'm saying, Reb. It's irrelevant. We're interested in FOMC and the change, in particular, in the change of policy. Okay, so you can see we've been risk on since the weekend because of what Jay Powell said, not because of last week's PPI or something. Right? We're just skipping past all the news, the data points. Who cares? Who cares? It doesn't even matter. What matters is what the Fed is doing. And that creates a risk-on rally, and that's where we've been. Okay? So you can skip all this other stuff. So like the ECB interest rate decision, well, I don't know. Maybe it matters, maybe not. But again, I'm just so shocked how slow Europe has been to the response. And now what they're doing is not enough, and it's flabbergasting. But I guess they're caught between a rock and a hard place because they're not a reserve currency. They're actually going to have to pay for their own debt. I mean, it's pretty easy for America to print $6 trillion because it doesn't hurt them. They don't have to pay for it. So that's unique to a reserve currency. But anyways, this is the big thing this week. Pay a lot of attention to that. Japanese import-export data. Okay, well, we'd like this to not be so negative. Okay, so we'd like to see less negative, which would be quite positive. But these are like horrific numbers. So we'd like to see Japan exporting more. Okay. What else going on this week? Initial jobless claims is going to be, this obviously is one to watch. Is it less bad? Less bad being good? Not bad being bad, but bad meaning good. Right? Is that Run DMC? This and that is how the story goes. Something like that, right? Peter Piper picked a pack of big peppers. Something like there. The butcher, the baker, the candlestick maker. Yeah, that's got to be Run DMC, isn't it? Old school Run DMC. Yeah. It's funny how these things pop in my head. You're like, what? Toxic said cut 188 pips on Aussie Yen. Yeah, the live trading group was all over that. And there was a Euro Yen. So we crushed that. The trade of the week, though, was Maida's last week, right? She sold, was a pound dollar, made 700 pips. So she entered at the exact top and then she exited at the exact bottom. Perfect entry, perfect exit. Drop the mic, walk off stage, take the rest of the week off. Right? And then, what was it? Group 3 was long Aussie Yen, Euro Yen, right off the exact bottom. So. So anyways, and then Friday, Canadian retail sales. Yeah, we'd like that to be good. UK, right? Retail sales, we'd like that to be good. German manufacturing PMI. Okay, whatever. Okay. Look at these numbers though, like 39. What? 28. They're not supposed to be this low. It's just, it's crazy. So James says USDN is going to pop. Yeah, I don't trade that one. So the thing is, let's say if you're right, James, if USD Yen is going to pop, there's going to be 5 other trades that are going to pop too that are way better than that one. Like it'll move. If you're right, it'll move, but you're missing like better trades somewhere else. Princess Wayna, let's say that you're on the wrong side in terms of bias. Yeah. Yeah. Do you wait until your bias? Ideally, yeah, of course. Ideally. But you have to ask yourself, though, like, there's a difference between being patient and being wrong. Like, if you, at some point, you have to say, look, dude, it's been 6 months. I still haven't had a trade. Well, like, you might be like, at some point, your fundamentals may be wrong, or your fundamentals are right, but the market is not the same as, you know, like the economy, whatever. At some point, you got to get on the clue train, right? So there's a difference between being patient and disciplined. So that conversation we had, and I think it was Maida asking the question late last night. She's like, hey, well, what about the 200 EMA on the weekly? And I'm like, completely valid. That's technical analysis, but that's too far out for me. It's just too far out. You can't say, I'm going to be a bear as long as price is below the 200 EMA. Well, you could be wrong for 6 months on the way up. Like it's you know, it's like in statistics, we use something like, oh, I wonder if I can do this differently. Hang on. I'm mixing a couple of thoughts here, and I got to make sure I get some clarity. All right, let's do this. In statistics, you have, let me show you the math here on this one. Okay, let me show you standard deviation. Okay, so we are going to go from this peak to where we are now. Okay? And then we're going to do 2 standard deviations. Okay? Okay, the upper part represents, okay, the upper part represents this area here and this area here, which represents 95% of price over that period. And 1 standard deviation is the more narrow one, and obviously it's less than 95. I forget what it is. Is it 87? I forget the math. But anyways, it's less, significantly less, as you can see. And if you go 3 standard deviations, or 4 standard deviations, okay, your accuracy goes up and up. Let's say to 99.5% accuracy at 4 standard deviations. Okay, so let me draw what that might look like. Okay, oops. Okay, so now you're saying 99.7% accuracy. Okay. Is that good? Oh, thank you. 68. What did I say? 87, right? Sorry, 68 and 95. Thank you. So now we're at 99% accuracy. Is that helpful? So in statistics, when someone says we're 99.562 confident, well, your confidence level is so large, right, that there's no chance of failure, which means it's actually irrelevant. Okay? So 68% of the time, which is interesting because it's a fib level, right? We're in this area, and 2 standard deviations above and below the mean are 95% accuracy, right? Which means if you're down here, this is unusually low, and if you're up here, this is unusually high, and most of the time you're in here, 2/3 of the time, right? Yeah, because the bandwidth is too weak. So like, it's like, what are the chances that the moon doesn't crash into the earth today? 100% chance. Well, it's sort of irrelevant information, right? So, so I was worried when discussing, let's go back to a typical, let's do this one. Okay. When we're looking at this weekly chart and someone says, well, I'm bearish. I'm bearish because we're below the 200 EMA. That is correct. But it's such, right? It's like being 3 or 4 standard deviations away from where the action is. And the action is right here. So you're like, okay, this is true. We are below. You're 99.6% confident in this. But that might just be, it's just too much. All right? So we discussed how I used to do 1 minute, 2 minute, 3 minute, 5 minute, 15 minute, 1H, 2H, 4H, and daily. Okay? And out of all of that, I've whittled it down to just a few time frames. And my favorite time frame for making decisions on where I should be, bullish or bearish, okay, because someone else might measure it this way. The way I've dealt with that, how much let me frame this slightly different. There are 2 things that we want to incorporate in our trading, right? Technicals. Okay? And 2, fundamentals. Oops, fundies. Okay. Is there any hardcore fundamental analysis on the 1 minute chart? Like you're analyzing market conditions based on fundamental analysis on your 1 minute? No, it's all tactical, isn't it? Not strategic at all. It's completely tactical. How about the 5 minute? No. 15 minute? Not really. That kind of helps you for today, but that doesn't help you for the quarter. Hourly, much more. 4H, yes, definitely, and daily. Okay? And really my analysis with fundamentals is somewhere between the 4-hour and daily, and I think I prefer, in fact I know I prefer, the 4-hour for that type of analysis. Now, are my technical indicators accurate on a 4-hour chart? Do the moving averages represent what's happening in general? Do the oscillators work? Do the pivots work on the 4H? Because we know I can do fundamental market conditions on that. I can break it down almost every single, like there's 4 hours of the Asian Open, there's 4 hours in the London Open, there's 4 hours in the New York Open, right? Okay, so that's cool. But on the fundies, right, if we go there, right, so technical analysis works here and fundamentals work here. But now fundamental analysis, does it exist on a monthly chart? Well, here's the thing. What happened in 1996 fundamentally is not priced into what's happening today. So even if you hit resistance from back in 1996, it doesn't represent the Fed. In fact, even central banking policy, strategy for policy, even banking itself has changed since then. So then you go to a weekly chart like this, and you're like, well, we're looking at April 2016, and that says, whoa, dude. 2016 is not representing what the Fed is doing now in regards to COVID-19. So even weekly is too far out. So to the best of both worlds is daily and 4 hour, and daily is fine too, right? So we knew, like, right? Daily is fine too, but you should be able to calculate the daily in your mind and know where you are in the 4 hour. And that's kind of where my planning lives, both technically and fundamentally. But you certainly can do it this way. And I don't tend to go beyond that, because beyond that, it doesn't include fundamentals, and it's too slow to really do a lot of technical. Like, you're not going to enter your trade based on a weekly chart, right? So it's okay. It's okay, but that's not how I play it. And then 5 minute, there's no fundamentals. It's all tactical. So the reason I called my book Strategic and Tactical Forex Trading, well, I'll start on a 4 hour a daily, and I'll make a decision, you know, right or wrong, you never really know, but you'll make a decision and say, okay, I guess I'm a bear. And I confirm that with fundamentals. And if I'm a bear, I'm going to say something like, you know, there's still some risk to COVID-19. And that as we go through the earnings season or something, things will look worse. And the news that the Fed is going to release tomorrow in the meeting minutes is going to show that they did talk about going negative on interest rates. Okay, that would all be my opinion as a bear. Okay, so there's my strategy. I'd say, okay, the Fed's thinking about going negative. COVID-19, we're not through it yet. The market is too far beyond the economy. Okay, so therefore I'm bearish. There's my strategy. I want to sell around this 61. And so now I drop into a 15-minute or a 5-minute or whatever. And now my strategy part is done, fundamentally and technical strategy on the 4 hour. And now I'm sitting here on a 15-minute waiting to get bearish. So now I'm looking at this and I'm measuring this as a top. And then I'm going to measure this as a bottom, and here or maybe here, depending on how conservative I am. And now I'm waiting to get short technically. So as a bear, I would look for down and then up. Okay, 55 in control would signify either a double top or another test of the top or a lower high, lower low. And so therefore, I'd probably, if this breach is lower, want to sell a rally up to 60.90, and I'm short. Okay, all done now on a 15-minute chart. But notice I didn't think about like the Fed tomorrow. No, that's on my 4H. Strategic first, my strategic plan first, then my tactical entry second. And so when I'm on a 15-minute chart, my strategy's set in stone. I got my finger on the trigger. I'm prepared, ready, willing, and able. Okay. Okay, so that's how I do that. Boop, 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 boop. Cool, right? No, that's a fake plan on. That's a fake plan. I just made it up because we happen to be sitting on that chart. And that might be your opinion. You can put all that together, but that's not my trade. Okay. So this pink box, I did a big speech on Sunday. We were right here on that candle. And we had traders that have been short this the whole time and made hundreds and hundreds and hundreds and hundreds of pips. And the conversation on this candle right here was, you better seriously think about getting out. And we went back looking at monthly pivots and seeing how many times they blew through the monthly pivots for those traders to make more money. And we saw 2 cases in 4 years or something. I'm so glad we focused on that, because look, if you would have held on, you would have been punished for your stubbornness. Now, the big question, you know, the elephant in the room, the 800-pound gorilla, is whether you're going to take another shot down. Okay? Okay? Well, to me, Reb, I boil it down to very simple things, right? When you know central banking, so I don't know if you're, when you say fundamentals, if you're all worried about PPI in France. I don't care about that. All of that is irrelevant. Okay, news points are interesting. If you follow the trends, you can figure things out. But it's slow and pretty irrelevant 99% of the time. And so that's probably what you're seeing. But when people are talking about news releases, that's not fundamentals. Like building permits are higher than expected. Who cares? It's relevant information to analyze if you use that trend data to interpret what is the Fed going to do about it. So the building permits, if they're higher than expected, that's generally a good thing. So if everything was generally like that, better than expected, should the Fed cut interest rates to negative? You guys answer that. If everything was similar to building permits that just came up, if everything was a little bit better than expected, does the Fed need to cut interest rates negative? The decision that you just made, does the Fed need to cut to negative? That's fundamental analysis. Your building permits, who cares? Would interest rates go up? Why would interest rates go up? We're at 20% unemployment. Why would you jack up interest rates? We have zero inflation. Why would you jack up interest rates? So with all this information now we're talking about fundamentals. Let's see. Money's free. Money is available if you want it. Let's go. That's what fundamental analysis is, Rep. Okay? So with fundamental analysis, I know like the day things happen. Okay? So for example, if interest rates ever go up, if they ever go up, is the dollar going to get strong or weak? Let's say 5 years from now, the Fed starts jacking up interest rates. Okay? We're on our way to 8% over the course of years. So we have to raise interest rates to 1%, then 2%, then 3%, then 4%, then 5%, then 6%, 7%. So most people think strong, and it's actually wrong. It'll actually weaken it. Okay? And then one day, way out in the future, the Fed says, we are done raising interest rates. We're done. We're not raising interest rates anymore. That's the day the dollar gets strong. And probably for years. Okay? And this is where, like, people just don't understand. Most people have all this backwards. And these trends last a long time. Okay, Reb? So there was a big period of my life when I was learning more and more about fundamentals and the bond market and the treasury market and the debt market and how all of this and, you know, the yield curve. I was teaching myself all this stuff. And for a year, I was really fascinated by one thing because I kept hearing about it and reading about it. And, you know, it must be one of these, you know, things like if someone says yellow Lamborghini, now every time you see a yellow Lamborghini, you're like, oh my God, yellow Lamborghini. Well, my yellow Lamborghini at that point was George Soros because, you know, I used to be within 6 degrees of separation of George Soros, right? We sat on a board together. So here I am one day, I'm a currency trader, and I'm buying dollar like crazy. Day after day after day, I'm buying the US dollar, and I'm making money as a currency trader. But I only got like 5 or 6 or 7 years under my belt, so I still have things to learn. And I'm buying dollar every day, and I'm making money. And then every few weeks, I hear that George Soros is selling dollar, selling huge sums. He's selling and selling and selling. And all these reports about how the dollar is going to be worthless, and the dollar, the end of the dollar, and, the end of fiat currencies, and all this stuff. And they're printing books about how worthless the dollar is. But here I am buying the dollar every single day and making money. Like literally on a 15-minute chart. Day after day after day, I'm buying dollar and I'm making money. I'm like, what the heck? But I keep reading about George Soros. So like, is George Soros an idiot? Well, he might be. He's odd. He's different. He's not your average George. But how could he be selling when I'm buying? And then after about a year, maybe 18 months of me buying, the central bank came to the end of their cycle and changed their policy. And it's as subtle as no more cuts. End of the trend. And from that day, for the next 2 or 3 years, the dollar weakened. And it clicked. His timing is different. His positions are also a little bit larger than mine, right? So he was selling the whole way, building his position. He was entering on a monthly chart or even a yearly chart, right? Whatever, no chart at all, really. But it took him 2 years to build his position. And I'm only trading on a daily, right? I'm a peon. I'm in nothing, right? But we were doing the same thing per se on different time frames, because by the time the Fed changed its policy, well, I was no longer a buyer of the dollar, I was a seller. And I realized what was going on. And I'm like, oh my God. He was simply building his position in anticipation of what the Fed inevitably was going to do. But he takes a couple of years to get into a trade. Okay? And then I realized he had a massive short on the US dollar well before the Fed changed its policy. And then he was right for years. And I'm like, oh, wow. Okay? So, it matters to George Soros. He may not even look at a chart, Reb. So you're like arguing like, I got everything on my chart. I don't understand fundamentals, but I'm a successful trader. Cool. I also appreciate that you don't just shoot down fundamentals. That's the easy thing. You're like, well, you just don't know enough. And maybe in the future, you'll incorporate some. So I appreciate that. But let's look at it from a different perspective. George Soros probably doesn't even look at a chart, but he knows the Fed. And he's like, okay, well, we're maturing the cycle. There's probably 8 to 10 more meetings by the time they go from one policy to neutral and then to the third policy. So he sees over the course of 2 years, right, there's an ebb to a flow. There's a peak to a trough kind of thing happening. So he's like, oh, I get that. And starts building a position. Never even looked at a chart. All he knows. And by the way, not fundamentals. He's not watching retail sales. He's not watching PPI and CPI and PCE. Well, maybe PCE. But he's not watching all these data sets that people hype up. I mean, they're important, but they're not important. What important is the central bank's reaction to this data. So he's looking at this data and going, okay, the market's mature, or in this case, not mature, okay, stabilizing. So he spends somewhere between 24 months and 12 months building a position with one idea in mind. The Fed is going to pause their current policy, which is the beginning of a new policy. It's the floor. And from that moment on, for years and years and years, he's going to do the one thing: sell the dollar, sell the dollar, sell the dollar, sell the dollar. But he's already got hundreds of millions of dollars that he's selling. And of course, now he's betting on a good economy, right? Because that's what weakens the dollar. And so from, I don't know what year, I'm going to make it from, let's say, this is before 2008. So, gee whiz, this might have been like from 2004 to 2008, he was short the dollar, making money every single day, hand over fist, and never looked at a chart. So, right? So now so I think Reb is right, and I also think George Soros is right. Reb could say he's successful, doesn't even understand fundamentals to the point where it's helpful, right? And then George Soros probably doesn't know anything about technical analysis at all. He's like, I've never even looked at a chart. It's all magic. It's voodoo, right? And so George Soros ain't wrong and Reb's not wrong. They're both right. But what if you could get Reb and George Soros into the same mind, where you're laser accurate on technical analysis and unbelievably foresee the future like an oracle on the fundamentals. And you put that together, you grow from young Padawan to Jedi Knight. Okay? So that's all so I can't say technical analysis only. I can't say fundamental analysis only. I think you should have both. And I've been saying this for years and years and years. So back in 2005 or 2004, 2005 maybe, I spoke at the very first Forex Trading Expo. I was one of the keynote speakers. I was on the big ad, one of the heads on the front, And so I did my speech, and then I realized I've never actually attended any training on Forex. So I thought I'd go check out these other experts. And there's a panel discussion going on, and it was hyped up to be like a fight. So they're arguing technical analysis only, and the other one's like fundamental analysis only. Technicals work, fundamentals work, all this stuff. And so I hid my speaker badge. I turned it around, and the audience is looking around like they didn't know how to interpret any of this. And these guys are fighting on this panel. And finally, I raised my hand, and I'm like, and they say, the guy at the back, I'm like, hey, we're in a room full of amateur retail Forex traders, and they're trying to figure out what they should be doing. You're arguing technical analysis only, and you're arguing fundamental analysis only. Wouldn't a healthier message be that you should learn both technical and fundamental analysis, and that you should understand both? And the room just went quiet, and they looked at each other and like, yeah, but everything is already priced in, and oh my God. And then they went back to the argument, and I'm like, So I left that. And then I went to another training, and you guys probably know this one, where the guy was doing Gartley patterns, and he spoke for about 30, 45, maybe 45 minutes. Then he realized he made a mistake on the charts in this PowerPoint slides, and that everything he had talked about was actually wrong, and there wasn't enough time to change anything. So the room just went quiet, and he's like, And I left. And it was interesting because I went to that conference, and I only knew what I knew. But I didn't know what anyone else knew because I was self-taught. So I felt quite vulnerable. So I released my smart plans idea because that's what I did, and that was good. And this is before my book, right? So this is what I did, and I was happy to present what I did. But I was very unconfident because I thought maybe all the other experts that worked at big banks and were big brokers and all this kind of stuff, they actually were like the real traders, right? And so I went to that first panel discussion. I'm like, these guys actually don't know what they're talking about. So then I went to that other one on technical analysis and sat down and watched this thing on Gartley. And I'm like, why wouldn't you just sell that? Why wouldn't you just sell at resistance? Oh, well, this has to be 72% of this, and this has to be 32 of this, and this angle, and that angle, and all this kind of stuff. I'm like, why wouldn't you just sell at resistance? And then he screwed up his presentation, and the room went quiet, and he basically, that was that. And I left, and I thought, you know what? I can kick their ass any day of the week. And I felt really, that was an important moment for me because I felt like, you know what? I am an expert. That was a big changing. And the other moment for me was when I was at the Chicago Board of Trade on the floor, and I was watching what these guys were doing in the S&P 500 pit, in the options pit, in the 10-year T-note pit. I watched soybean meal trading and stuff. And I looked at everything that they were doing and had discussions with several of the traders, and I didn't know what to expect, quite frankly, honestly, to be on a trading floor in the pit. Awesome moment, right? And I remember leaving, and I'm walking down LaSalle Street, I think it is, and I'm like, oh my God, I am so jazzed. I'm confident that I can beat those guys any day of the week. Not out of arrogance, but out of lack of confidence going in. Like, again, those are real traders, and I'm just a self-taught retail Forex trader. I came out of that like jazzed. Like, I can take those guys on every day. I can do this. I can really do this well. And those are good moments to have. Right? So to get there, I think technically and fundamentally, you should be educated. Right? So thank you for being open-minded, Reb. I appreciate that. Okay. Cool. All right. La 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 la. All right, cool. So, degenerate gambler and young Padawan. That's cool, Claudio. All right, cool. So anyways, going back to this, you must understand how sensitive it is to talk to someone that's done this trade, made all these trades, made all these pips. She's up 700 plus pips. And now suddenly the message is, you know what? You should very seriously consider getting out now. Thank God, huh? Okay. So now, I think some people might be thinking this. I'm not yet convinced, but the trade is there. So I don't know the future any more than anyone else. So if you see it and you want to take it, it's your decision, right? So you're probably looking at it this way. Okay. Let's do it like that. That's probably what you're thinking. So that's your call. That's your call. So one of the things we discussed is the timing of everything. This means this, this means this, and this means this. And it has to do with the timing. Actually, I should have drawn it slightly different. The slope and the timing of hitting the target dictates, or let's say changes, the potential outcome. Wayne, what is the best way to learn fundamentals? Have you thought about taking my fundamentals course? Right? Of course, it's a good idea. Happy days are here again. Okay. Okay. People are deploying capital. People are deploying capital. People are deploying capital. We talked about this on Monday, and I don't even know what day is it. Is it Tuesday? Okay, so yesterday I'm like right off the bat, game on, game on, game on. Everything here still says game on. So money is leaving Japan, the United States, and Switzerland and going to Australia, going to Europe, going to Canada, going to New Zealand, and people are not so sure about Great Britain. You see that? Okay. So was it Group 3 that longed Aussie and Euro Yen on Sunday? Actually, Thursday, right? Sorry, guys. Last Thursday, Group 3 made technical trade plans based on their fundamental analysis to long these two pairs by selling this pair. And they did it on Thursday. Very cool. You got to remember, people are wake up in the middle of the night to attend these group meetings. And they're putting in the effort for sure. So Aussie's already out there. Let's relook at maybe Euro Yen. Okay. Pachow. Look at this trade plan, guys. Is that the inverse head and shoulders? Julie says it was, yeah. Gary and Jim and George and Hassan and Rana. Yeah. Right on, Julie. Jules. Crushing it. Nice. So here's the funny thing. The week before, this was our discussion. And you can see I have it out, you know, probably on an hourly chart. Okay. And, right. Oh, I know what this was. Okay, here's the entry. Here's the target. And it sets up a counter trend, correct? So that's probably what I'm talking about here, is how to trade the counter trend. This is another example of why I would say to, you know, again on Meta's trade, like, okay, well played, get the heck out. Well played, entry's easy, exit's difficult, right? So anyways, so there's a great example of what happens when you hit your target. But this is a different target. This setup projects back to the central, maybe beyond. Okay, so anyways, so the group trade wasn't there. The group trade on Thursday was this. Okay, so, all right, and they're playing it like inverse head and shoulders, right? Break the neckline, all that kind of stuff. So I think typically what you do on this, by the way, just so we have all of this together, typically what you do, and this is a little bit of hocus pocus, I think, but this is what people are taught. So you find the neckline, you find the distance from the neckline to the crown, and then you take this out and you plot it on the breakout, and that's your target. So 119. Okay. I don't know if I believe that. That's what's taught. So you need to make your own decisions. Here we are all the way back up to 118. So that method is suggesting there's another 100 pips. But nonetheless, they bought at 115.50 and we're at 118. So very cool. Yeah. Yeah, Gary. Well, like I said, it's all about the plan. The trading part should be easy. Right? And then, of course, the best part of a plan is, you know, when you failed. So you're like, oh, and you get out and you're happy to get out. Versus a lot of people are in trades and like, well, I think it might turn around. That's a much different attitude to then like you didn't get what you wanted, and so you're disgusted by the whole thing. You take a 30 pip loss and you're happy. You're like, right? You're like, somebody in this market screwed up and I don't want to play this anymore, right? And you walk away happy to get out, happy to take a small loss. Okay? And if it wakes, and you're, boom, off there. So that's pretty interesting. And then the Aussie was the other one. Okay. Okay. So I guess I should point out, just so everyone in the room knows, they were planning that here on Thursday. So you have to have the patience and discipline for the down, down, up, 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 up. Okay? So Thursday, Friday, Monday. Okay? So they're 24 hours to 36 hours in front of the market. That's called planning. All right. Take a look at Aussie. Aussie was a great one. We'll do it here. I don't think this one is up as much. I think yesterday I had 100 pips on it. I think this morning I had 200 pips on it. But there you go. So there's the trade plan. Double bottom. Okay. Double bottom. You can see we have it all marked up here from, okay. We have it all marked here. So anyways, range, breakout, pull back. Let me bring it. Okay. Right. So here we are on Thursday. And on Thursday, they want to buy down here. And this is their target. So on Friday, it fell. They bought it. And they drove it up here. So they're long at 68 something, 68.60, 68.70, I don't know. And now they're at, right? So it's only, like I said, barely 200. Less than that, I think, even maybe only, I know it was up. Anyways. So the euro was even better. Yeah, even the Aussie Yen had to go down. So well played, Group 3. Okay. And you notice what happened as far as the overall outcome is that those that were risk off didn't get any trades. And the ones that were risk on made pips. Yeah, Highlander. In fact, it is, buddy. I should be wrapping that project up with the programmer today and updating the website maybe today and probably writing emails and stuff later in the week. So you might want maybe tomorrow to just log in and see if it's there. You know, like I've updated the site but haven't announced it yet. And I might actually do that to have some of you guys do some beta testing for me. And I'll have to create a video on how to use it and stuff. But yeah. Yep. Okay. So yeah, so my point here, guys, is that when you do things fundamental, and you say, okay, you're risk off, and I say, why are you risk off? And you're like, well, the economic data is not that great, and we're worried about this, and things might get worse in the future, and you think the Fed's still going to cut maybe negative. Okay, so you're risk off. I don't know what the future is, so your opinion is just as relevant as mine. And you'll notice that this week, those teams, those groups, so we had like 6 groups, right? So the bearish groups, the risk off, I should say, groups, didn't get any trades. None of them executed. So how many pips did they lose? How much money did they lose? They have a fundamental opinion, but market conditions were not favorable. How much did they lose? Nothing. That's a good loss, right? That's how to be wrong. Okay? We've all tested the other way, being wrong by losing money. I don't like that way, right? I don't prefer that way. So if you look at this not as how much money did you make today, if you look at this as how much money did you make this year, okay, then all you're looking at is your trades execute when market conditions are favorable, and you're probably within 2 standard deviations, right? Probably a confidence level of plus or minus 5. You'll probably make money. You see? And if market conditions are not favorable and your trades don't execute, there's a 95% chance, which is just simply 2 standard deviations from the mean, or a confidence level of plus or minus 5%, that you don't get a trade. So let's say 5% of the time you get a loss because you take the trade and you didn't look at the conditions properly, or the conditions changed. But 95% of the time you don't actually get a trade. And the reverse situation is 95% of the time when market conditions are favorable to your bias and you do trade, that you do better than break even. You make money. But 5% of the time you lose. Well, you add all that up, and there are long periods of time where you're not trading, but there's reasonable periods of time when you are making money, and at the end of the year, you're quite profitable. That's how you do it. But you have to be comfortable waiting 3 or 4 or 5 days. You might have to wait a week and a half sometimes for a trade. But then when you take the trade, you're going to crush it. Okay? But you have to have that patience and discipline. Jimmy got 60 on the USD yen. Okay, so here's what I was saying earlier about that. So congratulations on that. Okay, I'm not trying to poo-poo on that. But let me show you something, okay? Okay, Jimmy? James? Jimbo? J-Ho? USD is weak and yen is weak. So it's actually a very poor trade. So you made 60 pips. Congratulations. Okay? This is what I was talking about earlier. And I'm surprised it moved that fast. I don't know if your 60 pips is 6 pips. I don't know. But that is actually not a good trade. The yen is weak. The dollar is weak. You traded one against the other. I don't even know which way you went. Okay? Okay? But most likely if you traded like Kiwi yen or Kiwi dollar, you would have made more than what you just did there. So you did the right thing on the wrong pair, is what I would argue. You see what I mean? How did you make... Did it really move that much? It's crazy because this pair doesn't move that much. Yeah, okay, so let's see. So it went from 107.50 to 1... So you bought it way down here. How long ago did you buy it? See, this typically only moves that much in a whole day. So let's do it this, like, so bullish bias. Oh, I didn't want to do swing though. I wanted to do day trading. Template, day trading, bullish bias. So let's go in here. So, yeah, did you buy it like in Asia or something? Yeah, so you were in it all day to make 60 pips. So if you had been in it all day on Aussie Yen, you would have made 100 pips. If you were in it all day on Euro Yen, you would have made 200 pips. You see what I mean? So it's it's an okay trade here. It's a better trade somewhere else, and it's a way better trade somewhere else. Okay? So that's why I don't trade USD yen. I look at this and say, okay, buy the yen pairs first. That's how I look at that. Okay, J-Ho? So congratulations on the 60. It's a good day trade. It's unusual because you look at a typical day trade on here. Like yesterday, you're buying at 107 and it tops out at 107.50. So 50 pips is a pretty good day on this. So to just pick up more recently, if you were in, looks like you might have bought it at like even London Open. Okay, so like 60 pips from London Open is okay. So let's look at this now. Let me just leave everything the same and look right, and we'll see the same trade. Euro yen. Let's do this. Okay, same trade, and let's do London Open. So okay, so you would have bought it at 117, and we're at 118. So even that's not that amazing. But you would have made not quite double. You would have made 40% more money. Okay, and it's about the same. Okay, notice here, by the way, guys. What does this say? Bullish profit zone. 118.17.1. Okay. Is that right? Howdy! Howdy! Yeah, okay, howdy. I get it. Holiday in Cambodia, where people dress in black. Does anyone know holiday in Cambodia? I think that's Dead Kennedys, isn't it? Or is it Black Flag? I think it's Dead Kennedys. Huh? You guys know your punk rock, 80s punk rock? Right? I think it was something like that. All right. Good. Finally stumped the group. We got pretty good knowledge of music. That one is a little further out there. Wasn't even born then. Hello D, whose army were you in? It's a lot of armies. All right, cool. For some reason, I don't know why, they're not even quite related. I guess when I said who, I was thinking Obama's army, but a friend of mine, his dad was like an admiral in the Navy in the 90s. And I was still in college the first round. And so you can imagine if your dad is an admiral in the Navy, he's a pretty serious dude. And he was, well into his career, obviously, probably 35 years served in the Navy at that point, around this is probably 1993, 1994. And anyways, so my buddy was talking about how for the first time in my friend's life, he saw his dad cry. It was because of Clinton. shutting down all the bases. Because he had to, like, that was his job now as the admiral, shut everything down, furlough everything, all the people, just shut all these Navy bases down. Oh, man. Artillery! Yeah. Yeah, thanks. Thanks, James. I'll never forget the story about these special forces that went behind enemy lines before Iraq 2. And anyway, so they get caught in the city, and a whole armored division of Iraqi soldiers show up. They said it was like an earthquake. They could hear it coming. And an hour later, finally, this armored division shows up right at them. And so anyway, so they call in. They call it in, and they're like, oh, danger close. Because like they're literally surrounded by an entire armored division. Right? And finally, they, fire for effect. And they say, okay, roger that. And the mic goes quiet for about, 10 seconds. And then come back. And they're like, it was crazy. It was like 40 seconds inbound. What? 40 seconds. 40 seconds! They shot that artillery so far away, it was well beyond the curvature of the earth. They're like, what? 40 seconds in the air? Holy smokes! So they're inside this building, so they go inside the stairwell in the center of the building, and they hunker down, and the concussion of the explosions going on outside was so great, it broke one of the soldiers' legs. He didn't, fall down. The concussion broke his leg. And they came out, and there was no armored division anymore. And most of the town was gone. You're like, but 40 seconds in the air, that's some serious artillery. Oh my God. Yeah. Anyways. Yeah. Just like, holy smokes. My God, 40 seconds in the air for gravity. Anyways. All right, so just looking around, look, it's all risk on, so let's maybe, oh, you know what, let's just go over and do the commodities and stuff. I mean, all of this, you should be well on your way on all these things. Let me check out which one of these I like. Is this the one with Bitcoin and Rand? No. No. All right, so the other one is actually, so it's not market scan. Market scan profile MT4. Yeah, this is it. Is that right? James, no one makes the artillery joke anymore? The Robin Williams one? Yeah, I guess so. No one watches Good Morning Vietnam. Boom. Right? Look at halving. Down, and we're right back. Okay? So, what do you want to do here? Well, bulls are buying the 21, and bears are selling the top, which we identified 2 weeks ago. So we're playing that. Let me try to adjust this. And here's what you do. Okay, now you zoom in. You know if you're a bull or a bear. I'm not going to be able to make that decision for you. But you know where the range is. And you know if you're a bull, you're a buyer down here. And you know if you're a bear, you're a seller up here. And that's how that works. And I think the best way to play this is let it break out one way or let it break out the other way and then catch the second chance. Okay. This looks pretty deadly in the middle because even if you're playing the candles, you know, like you're playing the real bodies and stuff, it takes off and then it comes back and there's fits and starts. So I would treat this as a range and make it confirm or deny and create a new trend. Okay? That's how I trade this. Okay? Now, if we're in a risk on mode, I would assume this being up. Okay? Okay? That's sort of my basic assumption. But if you breach this 21, all bets are off. So that 21 is pretty important. Okay? So another way of looking at that is if you are a bull, you must keep it above this. But even this, I'm looking at this, it's already 7/8/6. You know, so I think I'd take a walk. That's just me, but I'd take a walk. All right, what about this? Okay, out of position, probably needs a retracement. Okay, but that's just technical. Fundamentally, it can do whatever it wants. Hey, do you remember when oil was free? Where's Punk? Where's Chinese Punk? Punk was trading this like crazy. The sad thing about oil is you can't swing trade it. But Punk was all over that. Yeah, I was thinking that too. Yeah, I can do it from time to time. So the question is, Wayne, would you be able to do more scalping like I did yesterday? The problem is it's so slow. It's a dog and pony trick. It's not how to. It's not your secret to success. It's fun and interesting, but it's not. I mean, it's nothing. Right? It's nothing. You should know how to trade like that. But it's just entering a trade. It's not even. So I always find it silly. I'll do it from time to time, but what it does is it gets people excited and they want to trade, they want to do that, and but that's not the right way to trade. The right way to trade is slow and boring, right? But you make a lot more money. For me to sit here and trade a 1 hour chart for 90 minutes, I'm just trading inside of a candle, picking up 20 or 30 pips, but it's silly. It's entertaining, but it's silly. Okay? What you should be doing is waiting 1 or 2 days to get a proper price in the direction of the trend, and then doing that stuff at the exact right moment. You're at that right price, the one you've planned on, and now you're just entering and turning it over. But for me to do that at this time of day, based on whatever happens to happen right now, which is random. Okay? So the time might be exactly the same, 8 o'clock. But what's happening right this time, like let's say exactly tomorrow at 8, is fairly random. It's not like when you have a trade plan, you say, well, let's say you think this is going to reverse. Okay? Well, there's multiple prices which that'll happen here or here, maybe even a higher time frame if you're using different pivots. And then there are multiple ways it can come down and breach and come up, or it can come down and double top, or it can do, there's multiple ways of sort of skinning this rabbit, and none of it's likely to happen in the next hour. So, right, you know the price and you know what your strategy is and you know the price, but what you don't know is your time. So you have on your chart, you have time and you have price, right? The price time continuum. So your strategy, you know what your strategy is. In this case, you think it's going to come down. And you know your price, you think it's going to come down between 30 and 31. You just don't know when. So for me to open up at 8 o'clock today and say, okay, we're going to scalp this, yo, it might not, it probably, statistically speaking, it's almost certainly not the right time. So that's why you got to be patient and be there and watch it and set up your trade and look at market opens and daily opens and weekly opens and you wait, okay? But for me to like scalp a 1 hour candle, I know it's fun and you're like, oh man, if I could do that, I'd be so rich. But no, it's not. It's fool's gold is what I'm trying to say. It's just simply some basic price action and it might be exciting, but it's not how to trade properly. But you should be able to do it, okay? Right? You should be able to do it. But I mean, whatever. You need to think bigger than that. What that does is it skips everything else important and gets to the last part of the trade, right? But you're skipping everything else. You're skipping all the work. You're skipping the patience and discipline part, right? Where you make money is that you're planning tomorrow right now. That's where you're making money. And then sometimes you have to be patient for 2 or 3 or 4 or 5 days. And then you get a setup. So like group 3 had to wait almost 36 hours. Boom, they're up 300-400 pips, right? Maida had to wait a week and a half and she made 700 pips, right? Like that's how you do it. You wait with proper plans and proper strategies and stuff. But for me to log in and like, okay, guys, you know, let's play with this 1 hour candle. Well, first of all, it's already 9:21, so I don't know if I'd play this candle anymore. But to drop into here and say, let's have some fun with this candle, it's just not even the right thought process. Now, if you were preparing to enter a trade, okay, then that would be different based on a strategy, but you'd be done by now too, by the way, and walk. So I don't know, but yeah, sure, I'll do it, but it's a distraction. You see what I mean? So but maybe I can give you an example. Okay, what do you want to do here on an Aussie Yen? Okay, and by the way, I worked on timing yesterday with the group. Timing. Okay. Now you can go into a smaller time frame. Okay. Okay, and then you go even smaller. Okay. The only thing you should have been doing since here is buying. Whether you use a 1 minute chart, a 5 minute chart, it's pretty simpleton. Okay. Up, 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 up. Then you grab the roll reversal. And you buy that. Now up, 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 up. And now you grab the roll reversal. Okay. And you just do that over and over again. Hoorah! Jim was in the Marine Corps? Right on, Jim. Jim says, a lot of great trades this week, only if you're a bull. Okay, what will happen is everything will get overvalued and there'll be a pause, an exhaustion in the uptrend, and then bears will have their chance. I never look at it as being right or wrong per se. It's just simple timing of the dance. Sempre fi. Or is it fi? Sorry, sempre fi. I always think of curry he, which is airborne, isn't it? Curry he. You guys see what I'm doing here? I do some basic analysis. We're trading inside a 4-hour candle. Right? It's what you do when you're bored. Okay? So here, up, 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 down, down, buy, up, 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 right? Down, down, buy, up, 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 up. At some point it's going to come down, buy, and then it's going to go up. And you're just doing this inside of a 4-hour candle. Okay? And now, of course, it's very helpful to have tops and bottoms predefined for you. So you go in here, and you know you're pretty late in the game. So actually, this is not even a good time to be doing this trade. You might have been able to do this in London Open, okay? And that might have been risky. But if you look at this, like imagine now, you should be able to imagine this on your 1 hour, or sorry, your 1 minute chart, or your 5 minute chart, or your 15-minute chart. But notice Aussie Yen. These are all 4-hour candles. Up, 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 down, down, buy. 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 Like, you should be able to do this on your own. But I'm glad that you're here with me so I can teach you. Okay? So now we look at it again and see some of these have larger degrees of retesting, but never technically became bullish or bearish, right? Or never technically became bearish. Okay? So now we're on a 1-hour chart, not a 4-hour chart. Okay, there's the low, there's the low. Okay, there's some lows. Okay, there's some, right? Low, 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 low. Or, let me redo this in a slightly different fashion. Let me get rid of this. I'm just trying to think of different ways to explain it. Okay. And by the way, if you like what I'm doing, a couple of things. Click the like button. 66% of you have not clicked the like button. The second thing is take the training course. It's still 80% off. Take the training courses. It says 35 hours, but I bet you it's 50 hours of training videos. Get it while it's 80% off. If you find this helpful, dude, you ain't seen nothing yet. Yeah, the breach of 70, which we actually were selling at 70 and making money, right? All right, so anyways, I want to do it like this. I want to show you this stuff. I guess I have to do it. No, that's not going to work, is it? New higher high. Oops, that's a little too high. Okay. And looks like maybe one last higher high. Okay, so I'm paying attention to the higher highs and the lows. Okay, so now you're on a 15-minute chart. So now we're scalping on a 15-minute chart, if you want to call it that. Okay. Up, 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 down, down, buy, up, 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 up. Okay, this is a change, right? This is a change here, right? This is a change, slowing down, so you got to be a little cautious. Up, 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 down, down, buy, up, 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 down, down, buy. And these things are the previous lows. So what you could do is up, 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 down, down, buy, up, up, up. So this gets deleted. Okay. Up, 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 down, down, buy. So new higher high. So now this one gets deleted. Yeah, this is going to be slow if I do it this way. Oh, well. Okay. Now up, 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 down, down, buy, up, up, up. This one gets deleted. Okay. New higher high. This one gets deleted. Okay. New higher high. This one gets deleted. These are all lows based on 4-hour candles. Test, test, test. These are all wicks, 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 right? New higher high, new higher low, right? Up, up. So this one gets deleted. Okay. And it's still riding. So new higher high. I wouldn't call this quite ready. So, because this one just started, and this one's pretty iffy. That's why I think it's going to come down, or has a good chance. So right now, for example, instead of looking at this bullishly, you have to look at this bearishly. You can't sell this until you're below this line. Okay? And that would be the first time in 48 hours of trading that you got a lower low. Okay? This is the last low on a 4H. So I'm really simplifying this and just saying, look, as long as we're above that, we're still technically bullish. So if I'm a scalper, this is super easy. Buy the dip, buy the dip, buy the dip, and then keep moving your line in the sand. So now we're actually in a pivot profit zone. So I think now relative to all these other candles since here, there's a much higher propensity for this to happen. So now, if it does, so I'm already anticipating the future. And I say much more potential for this to happen. So if it starts to drop, I might exit. Or if I was a bear, I'd be waiting to sell this, and I'd do the opposite that I just did on the way up. I would do the exact same thing, pulling the tops down as I sell. Okay? But like I said, that's just basic technical analysis. Actually, a price action. So if you don't know how to do that, oh my God, you're going to need to know how to do that. And that would be in the, there's 2 places to get that. Well, the live group, the price action training course, and the performance coaching. Okay? You're going to need that. Never heard of it, Gary, but if you don't mind, send it to me and I'll check it out. It might be awesome. There might be something that does something similar but better, all that kind of stuff. But right on, guys. But you know, this is what you need to know. So like if you're like, if that was helpful and awesome, dude, you ain't seen nothing yet, right? That's like, yeah, you ain't seen nothing yet. We'll take you to a way higher level than that. Okay? That's just how to enter a trade properly. Wait till you have proper plans. This is the easy part of trading, right? So so that should be exciting. That should be very, very exciting. Okay? But you ain't seen nothing yet. Okay? So take the courses, guys. 80% off. Take the courses. I don't know what else to do. You need to know, yo. All right. So Bitty coin we did, and oily coin we did, and goldy coin. You want to do some gold coins instead of some Bitcoins? All right. Let's see what the previous plan was. I got to move this. Look at that plan. Whoop, 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 whoop. And boom. So there was a little more potential here. And unfortunately, range. But if you're a bull, you're probably going to treat this as a breakout. And if you're a bull, you are thinking 1788, Baba. 1788. By the way, thank you for subscribing, everybody. I appreciate that. Welcome to the family. I do these webinars every single morning for free, but I'm asking you, you have a responsibility. Every day, click the like button. Every day, leave a comment on the recordings. This tells YouTube this is quality content. And 3, okay, you must thank Traders Way for making these videos available to you. You do that by visiting Traders Way like today and open up a demo account. Okay? Then give them the opportunity to earn your loyalty and respect. But you must pay it back and make that happen, okay? Don't be a lurker. Okay? Right on, baby G. It's my pleasure. Okay. Cool. So what do you think of that, guys? If you're a bull, you're going to take this, right? Up, 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 down, down, buy. Up, 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 up. So now with that information known, okay, now what? Well, it hasn't made a lower low in a day. So you know you got a line somewhere around there. And now maybe you drop into something like this. And now use your technical analysis, or maybe like this. And at some point, you'll want to be a buyer. So you're asking yourself, is this it? Is now the time? Is now the time? Is now the time? There's multiple ways of answering that. It depends on your analysis. Okay? So this technically becomes bullish at what point? At what point does this become technically bullish? Right now, I'd argue that this is actually neutral with potential bullishness. But how do we know technically it has become bullish? Not an opinion, not a bias, but a technically bullish. Break and retest is one way. That's price action. Thank you, Jim. Is there another way? Okay, everyone said the same thing. That's cool. It's not the answer I'm actually looking for. Nope, John, close, but not correct. That's price. That's only price action. That doesn't tell you. Thank you, Gregory. 2155 is by definition bullish. And right now, they have not technically crossed on a 15-minute chart. Okay? ABCD formation. I don't know anything about that. Sounds like just another 1, 2, 3 type pattern. Sounds like just another crown, head and shoulders, inverse head and shoulders. There's so many names for the same thing. Black free thinker. Welcome to the family. Okay. Bow, 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 bow. G'day, mate. Shall I throw a pip on the bobby for you? Crack a tinny, mate. Hello, Pablo. How are you? How's your mum? Hello, hello, hello. I don't think I can do a Kenyan accent. Yeah. Well, we knew that going in, right? Okay. It's actually not that impressive, guys. So it's just doing what it's been doing. No, Jamie, you have to pay more money. More money! It's not a lot, Jimmy. Sorry, Jamie. I like to call everyone Jimmy. But anyways. Put it this way. During this COVID-19, I discounted the video training course by 80%. And then made a super sweet deal to join the group. So money shouldn't be the problem. Okay. So anyways, you see this, like, whatever. So I don't trade crosses, so it doesn't affect me. I just wouldn't buy pound today. I'd much rather buy something else. But a lot of these things are elevated to the point where, like, a lot of these might be done for the day. Okay. In fact, they might even be done for the week. So if you made a bunch of money, you have to remind yourself it's not because you're a genius and you're all powerful. We're all pinky and the brain. Okay? And you got to understand when to hold them and when to fold them. Okay? Aussie is quite mature. So one of the things we talk about in the live group is, how mature is the trend? And a lot of these are very mature. Like, look at CAD Yen. Like, dude, seriously. Look at this. We're practically there, right? There's a lot of maturity. Well, this is just the same trade over again. Okay. There's a lot of red flags. Okay. Oh, is it almost 10 already? Yeah, so it's definitely time for some volatility to kick in. Right? So anyways. So I think I'll bid you adieu. And I will see you guys tomorrow. Thank you for being part of the Forex.Today community. Please remember to like and leave a comment on the videos, okay? So like 3,000 people watch the videos and I get like 19 comments. Like, leave a comment. If I were me, I would document what I learned for myself. So you can search your comments and say, what was that video where I learned how to scalp a 1 minute chart? Oh, and so you'll be able to search it and say, well, you learned how to scalp a 1 minute chart because you actually documented that in your comments. So that's how I would do it. So basically you're archiving all the Forex.Today videos like they're your personal private made mentoring and education service. And now you can search through all your education videos to get the information you need whenever you need it. That's what I would do if I were me. Cool. If you need stuff, right, in the description below this video, there's links to my book, links to my charts, links to video training, links to live group, links to Trader's Way, links to performance coaching. Like, there's so many resources available to help you improve that you should reach out and grab them while you can. So thank you for being a client of Trader's Way. Thank you for being a member of the Forex.Today YouTube community. And I will see you tomorrow. You're beautiful, babe. I got to jump. It was real. And we'll all just sit here pretending like the stream is over. I guess it's over. It's taking its time. Is it over? It's not over. How many times do I have to click the button? Just waiting for YouTube to like end the stream. Still says it's running. Maybe I'll click this button.